If there's one force that marketers of all stripes need to contend with, it's the power of herd mentality. A brand's success or failure rests largely on how consumers feel about it, and those same consumers are deeply influenced by what those around them have to say. Nowhere is that more obvious than on social media networks, as a recent study by PwC discovered. Researchers found that social networks are the most powerful online tool in determining what a shopper wants to buy. Networks like Facebook, Twitter, and Instagram were referenced by 37% of the 22,000 respondents surveyed. The study also found that trust in a brand was the second most influential factor in a purchasing decision after price. Most brands are aware of how large a role social media can play in creating or destroying that trust. But what they often overlook is how equally persuasive offline conversations can be. Engagement Labs is the go-to authority on that subject. The company has cultivated 12 years worth of data on word-of-mouth conversations and their influence on consumers. What they found would surprise most marketers. Engagement Labs discovered offline conversations are just as predictive of buying behavior as online conversations. That held true across virtually every retail category, be it technology, food, or beauty supplies. Taken together, online and offline conversations account for roughly 20% of a brand's total sales. That adds up to anywhere between $7 and $10 trillion of annual spending. With such a massive slice of buying behavior in the balance, marketers need to understand how consumers are feeling at any given time. Engagement Labs has designed just the tool for the job. Its new and improved TotalSocial 3.0 platform uses artificial intelligence and machine learning to pull insights from both online and offline conversations. It then recommends ways that brands can adjust their marketing strategy to influence that ever-changing sentiment and capitalize on it. Engagement Labs CEO Ed Keller explains what TotalSocial brings to the table and how it will help drive the company's growth. Ed, since we last talked, you've made a lot of advancements to TotalSocial. You've got TotalSocial 3.0. So give us a sense of some of the AI and machine learning that you've bolted on to enhance TotalSocial.
So earlier this year, we launched our 3.0, where we brought machine learning into our predictive analytics, allowing us to very quickly run through a lot of different ways that clients can get the maximum benefit and understand exactly which types of social media and word of mouth are going to drive performance for them. And then just recently, we've now brought artificial intelligence into our diagnostics as well, where literally the machine tells us in real time when there's something that's happening that's unexpected, and us and the client, we can begin to look to see exactly what's happening and how can they take advantage of a trend in real time or deal with a problem in real time. So the power of artificial intelligence in what we do is very significant, and clients are responding very well to it.
You put a release out recently which said that you had about $7 million in revenue from TotalSocial in 18 months' time. What's the significance of that for Engagement Labs?
Yeah, so TotalSocial is a new and quite an innovative product. We're the only people who are taking and integrating online word of mouth with offline word of mouth. We have predictive analytics that power it to help our clients understand exactly what the future impact of changes in total social metrics are. And so when you introduce something that's new and different to the marketplace, you're looking for validation. We knew we had a good idea, but how quickly would clients adapt it? And the fact that we're over $7 million in revenue in just a year and a half to us is excellent validation that the marketplace understands what we do, understands how it's different, understands how it's better, and we're getting blue chip clients across a whole range of verticals. So to us, it indicates that we're on the right path and that the marketplace agrees with that.
Let's talk more about that. Many of your clients and customers are Fortune 500 companies. They prefer they not be named, but you're talking about some big names in beauty, financial services, a major sports league. So what kind of traction are you getting with clients and customers, and what kind of feedback are you getting?
Yeah, so we're really happy that we've gotten adoption from across a whole range of verticals. Sometimes you launch something new and you think that companies maybe that are in technology with hot new sexy products, maybe they're the ones who can take advantage of social trends. But we've discovered that we've got a range of of verticals, and to us that indicates we've just brought on some retail clients lately, and now we're going after a bunch more retail clients. So every time we get a marquee brand in a single sector, it helps us to understand, okay, time to go after other brands in that same vertical. And the fact that we've got a range of verticals now, we're covering about 15 within TotalSocial, and we know that the impact of TotalSocial improvement is considerable, not just for high ticket items, but for everyday products as well. And it helps us to realize that there's a large market that we can go after and be successful with.
Ed, as far as marketing for the company and awareness for Engagement Labs, you have an over-the-counter listing in the US now. So how important is that in terms of attracting a whole new investor base?
Yeah, so we've been on the TSX Venture Exchange for several years now with Engagement Labs, but we made a decision about a year and a half ago to focus more of our energy with TotalSocial around the US market, and we think that there's a great opportunity to introduce new investors to our stock and take advantage of our growing US presence. And so in March of this year, we secured a listing on the OTC, and we're beginning now to actively make sure that that investor group knows who we are and what we do, and we think it will expand significantly the number of investors who can become part of Engagement Labs, increase our volume of shares, and ultimately be beneficial to all of our shareholders in the US and in Canada.
In your most recent report, one of the impressive numbers was gross margins rising 48%. At what point do you think we can see a cash flow positive for Engagement Labs?
Yeah, so we put out recently our preliminary Q1 results, and there's a couple of things that I thought were notable, and one was the rise in gross margins, which I think reflects our growth and the fact that we'd taken a lot of cost out of the business about a year and a half ago, and it's really helping our margins. We also saw that year over year revenue had gone up 25%, which indicates to us that we're on the right track. As you may know, we hired a chief revenue officer in late December of last year, and we're making a big investment in sales, and we've got a platform, we've got a database, and the more we sell, the marginal profitability is very high on every new client. So we think we'll ultimately continue to grow at a rapid rate, and we're beginning to really hit our stride now, and we think our gross margins will be able to continue to rise, and I think from a cash flow positive point of view, we're getting closer. I don't know yet whether it's going to be early 19, something like that, but we're definitely on a path toward getting there.
Now, you've talked about validation from Fortune 500 customers. You had that great run from 4 or 5 cents to 25 cents or so, and then the stock sort of returned to where it was. There was a lot of volume for a while, and then volume dissipated to a degree. So what can you tell us about the stock, and what can you tell investors about what kind of opportunity there is here?
Yeah, so we had put out a series of releases about new clients we had signed, about some renewals, and I think the marketplace got excited and the stock went up as a result. We had just done a financing that had a 4-month hold period, and so as we got to the end of that 4-month hold period, I think some of the investors were taking advantage of appreciation and started to sell, and so the stock went back down. I think we have no short-term selling pressure at this stage. I think we're going to have a series of continued announcements to make, and I think our stock is low relative to where it should be. If we look at our market capitalization, it's about 2 times revenue. I think comparables in our space tend to sell for 6 to 8 to 10 times revenue. So I think as we continue to deliver and have good news, I think now is a great time, honestly, to be getting involved in our stock. I think we should have a very good run of appreciation ahead of us.